for the CME Group. Tim Haefke from Top Notch Trading here on Wednesday, February 6th. All right, I'm just going to explain a little bit what I believe is going on in a study of mine. And they're happening in the 30-year bond along with the NASDAQ and S&P futures. Three main key futures that I put a study out on. And it's with these moving averages. I have the 15, 30, and 6-day moving averages in a streamline, what I call the streamline pattern right now. And what the streamline pattern does, it doesn't give any kind of a parallel lift or a parallel push to have this markets, and all three markets, to whether they want to continue in a lower move like the bonds have seen recently, or continue higher like the S&P and the NASDAQ has seen recently. And with this crisscross patterns, what happens is the streamlining effect is straight across. These moving averages will flip-flop these futures. A move will get above them and then below them. And it's witnessed by how the S&P has traded since the beginning of the week. And a very important level that was hit yesterday that I mentioned last week was 1491 even. And I was really looking for stops right below that level, but it responded nicely yesterday with a 1490 half low, and holding that 91 level, did see us settle above it. And what happens? We rally all day yesterday, taking them up nice and easy. And now this morning, the first move that we see from the highs is we're coming back off. The NASDAQ came out and found a nice test of its settle price of 49 even yesterday. And it hit that top with a 49 pit, 49 quarter mini, and it rejected it back down to a 41 level. So that was a nice trade. But the S&P, which it hasn't peaked up to its settle price of 0590, is looking to see if that is tested, and if it holds a move back below 150230, I would suspect a move in the S&P to go lower, looking for their previous day settle price at 1493.40. However, like I said, this flip-flop effect, wax on, wax off, is going to continue to show its face until we can see these moving averages start paralleling at an even pace, either upside or downside. So until we see that, that's the kind of trade we're going to be into. And it's been a grind. Same way in the bonds. We are seeing sideways action with flip-flop action. And just one more point, I mentioned on a webinar last week. If you remember when we had the last day of the year, December 31st, and then we came and had the day off and opened, January 2nd, we had gap openings in the two NASDAQs from their settles to higher, which the E-mini actually gapped, which signaled kind of a breakaway gap, and that's why we've been seeing higher ground made. And if you don't think there's a divergence with these bonds, an inverse relationship, what did the bonds do when they ended up settling after the 31st of December last year? They gapped lower. So moving forward as the year progresses, those gap prices are going to be main focal points. And we'll just see if the S&P right now, its next target, I was looking for 1370 up to 1522.80. And if they go into a continuation mode, the upside channel right now says 1549 and extra. I expect all-time new highs before the end of this year. Remains to be seen. Have a good day. We'll see you next week.